Welcome to Dr. Fred Markets. This is not financial advice. Every day, billions of dollars move across markets that most people don't even know exist. Crypto, stocks, AI, the signals are there if you know where to look. And that's exactly what we do here. Let's dive in.
Your favorite sports team is a worse investment than its stadium parking lot. Trump screams at the Fed for cuts, the S&P nudges up 0.7% to 742.7, and Bitcoin drifts higher to $63,742. That's noise. The real tell? Franchise owners are quietly turning trash stadiums and ugly real estate into cash machines, while retail investors argue about rate hikes on Twitter. Look at every major league. Valuations up triple digits over a decade, while ticket sales grow like a boomer's Facebook friends list. Slow and old. The growth is not from fans. It's from the asset side. Media rights, real estate, and tax voodoo most retail investors never touch. Now look at markets today. Nvidia up 1.56% at $208.03. The S&P up 0.7%. Everything pretending to be priced in. While you stare at that, private credit funds are quietly writing loans to the same billionaires who own these teams, secured by land, naming rights, and future ticket cash flow. You don't watch that ticker. You should. Third signal, gambling money. Sports betting is exploding, and every league is wet signing deals with books that want your parlay addiction. The funny part? The sportsbook stock and the stadium landlord are eating the risk premium you think you're getting by just loving the game. You're not a fan, you're a liquidity event. So here's the pattern. Sports franchises are inflation engines, not because the team is good, but because they sit on irreplaceable, city-approved monopoly assets. Land you can't replicate, broadcast rights protected by law, and tax deals normal real estate investors never see. Meanwhile, the public market lets you trade everything around the team, REITs, private credit, even casino stocks, at way more reasonable multiples than the team itself. Everyone flexes that the Dallas Cowboys are worth billions. The real flex is owning the concrete under the parking lot, the debt secured by the luxury boxes, and the cash machine that skims the nacho line with 30% operating margins. You don't need to own the jersey to own the cash flow. Here's the mechanism nobody on sports TV explains. Step 1. The billionaire gets the city to help fund a stadium, sometimes with tax-exempt bonds, sometimes with infrastructure support. That lowers their real cost of capital compared to every other landlord in that zip code. Step 2. The team signs an ocean of long-dated contracts. Naming rights, suites, season tickets, media deals. That's not fandom. That's a bond ladder. Predictable cash hitting for 10 to 20 years. Step 3. They monetize the hell out of everything within walking distance. Mixed-use development, restaurants, hotels, office space.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
The sports district becomes a monopoly micro-city where every hot dog and beer carries a stealth stadium tax that flows back into real estate valuations. Translation: the scoreboard drama is a smoke machine. The real game is structured like a low-volatility infrastructure fund welded onto a regional real estate play, juiced by tax arbitrage, and you're out here buying merch. So what do you do if you're not a billionaire or a city council member bribed with box seats? 1. Stop thinking in jerseys. Think in land. Look at publicly traded REITs or developers with exposure to stadium districts, arenas, or entertainment complexes. You're not chasing the meme of team value. You're buying the stuff that throws off rent when fans are drunk and stuck. 2. Follow the debt, not the drama. A growing chunk of big-ticket sports infrastructure is financed via private credit. You can't just buy the fund with a Robinhood click, but you can look for public BDCs, business development companies, or credit ETFs with sports, leisure, and venue exposure. Someone earns interest every time the team upgrades its billion-dollar scoreboard. That someone is rarely the fan. 3. Audit your own bankroll. If you regularly lose money betting on games, divert a fixed slice of that degeneracy budget into boring, cash-flowing assets tied to the same ecosystem: regional REITs, venue operators, hospitality stocks, and stadium corridors. You're already paying the entertainment tax. Demand equity with your pain. The one thing you learned today: sports franchises are just shells around a real estate and credit machine that harvests fan emotion into landlord income and interest payments. Once you see that, you stop arguing about referees and start asking, who owns the dirt, the debt, and the doors? This is not financial advice, but it is the truth. If you only invest as a fan, you stay the product. If you learn to track the land, the leverage, and the lines of credit, you graduate from spectator to silent partner in the stadium's balance sheet. 3 quick takeaways. 1. Franchise valuation is a distraction. The real money sits in stadium-anchored real estate and long-dated contracts. 2. Private credit and venue-linked lenders quietly eat a predictable yield from your fandom. 3. Your move is to shift from betting on scores to owning the ecosystem around the arena. If you want more brutal autopsies of where your money actually goes, hit subscribe, then go check who owns the ground under your favorite team's stadium. It's not the mascot. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.